Hey guys, I'm going to tell you what my team and I are expecting for the markets for April of this year, and we're going to be talking about cryptocurrencies, the influence of China on other countries, their alliances there. We're also going to talk about a continuing softening of the US dollar, the approaching recession, which we absolutely believe is on the way right now, the beginnings of inflation, even some municipal bankruptcies, which might be starting soon. We're going to talk about all this stuff right here and right now. And if this is your first time here, my name is Peter Leeds, and along with my team, this is where we show you honest investing strategies for maximum profit. So subscribe to the channel, and we've got lots of videos with this stuff. Let's check it out right now. Now, I'll say a little bit about cryptocurrencies first, because there was a time where they were so new and everybody getting involved with them, a lot of the people getting involved, a lot of the dollars going in there were from people who don't even have a computer. This is what was an issue. There's nothing wrong with the technology. I love the blockchain, the entire concept, a lot of the stuff that the cryptocurrencies are doing in the way that it's able to move money from one place to another, devoid of central bank influences or interest rates or any of that kind of stuff. Now, what we're talking about, though, is that there's a lot of people who shouldn't be involved with cryptocurrencies, and now a lot of speculation has flowed out of the currencies. People were buying just because cryptocurrencies continued to increase. That was their reasoning. They didn't even understand the technology. There's nothing wrong with people who understand the technology buying into specific ones. But even so, I will mention one thing I wanted to point out is that there's a big difference between that speculation phase, which is sort of common, now it's gone a bit. There's not as much speculation. People understand that cryptocurrencies don't just continually increase in price forever until everyone's really, really rich. But the way to look at it now is it's very similar to what I always refer to, and you've heard me say this before, that there was 1,800 automobile manufacturers in the United States at the turn of the century. Most of those companies went out of business. They cost their investors money. Okay, there's too many of them, and the car is a great idea. It's still around today, but there were so many options. The fragmentation of the concept of automobile manufacturer is what cost everybody the money. That is similar to what's going to be happening with Bitcoin, and I'll show you exactly what I mean. When I say Bitcoin, I mean I'm talking about all cryptocurrencies just because it's easier to say. It's just like when people say that there's a lot of money printing going on, or the government's printing money. They're not printing money. They're digitally loading it into existence. They're not actually printing or running the printing presses, but that doesn't matter. You get the point. The point is that cryptocurrencies have gone through a phase where there's a lot of speculation behind them from people who didn't understand them. Those people have now washed out, but the cryptocurrencies are still around. And that's an important point right there. It's a point about the proof of concept. The concept of digital currencies will never go away. If it was going to go away, it would have done that already. The fact that it's still here after all the things that we've been dealing with from day one until now with cryptocurrencies, the fact that it's still plugging along and chugging along, there's a potential that there will always be cryptocurrencies. This idea will never die. However, there are thousands and thousands of options to choose from. The fragmentation is going to wipe out almost all of them. You're going to have a few survivors, and a way to check this, a way to try and refine if you're going to be doing the analysis and choosing which cryptocurrencies to buy between, would be to look at the changes in prices of cryptocurrencies, not in relation to the US dollar, but in relation to other currencies. And I'll show you how to do that on the table here, which is provided by coinmarketcap.com. And you can compare the changes in prices of all cryptocurrencies, not from US dollars, but you can choose it in terms of changes in percentages based on how it's related to Bitcoin or Ethereum or very specific cryptocurrencies. And that might help you a little bit to understand how these different cryptocurrencies are changing when one of them is going down when the other is going up, or when the entire cryptocurrency market is declining at once, but one of them is holding up better or rising even in that environment. That typically indicates an investment. This works with stocks, but it typically indicates an investment which will actually do better when the market rises again. So if the entire cryptocurrency market falls and the lowering tide lowers all boats, so to speak, but one of them holds up better than the others, that very often will be one of the best performing cryptocurrencies or stocks. If you're using stocks in this example, it will be one of the better performers when things do recover or reverse and the entire tide starts lifting all boats. The ones that held up the most when the tide was falling are the ones that are going to gain the most when the tide is rising. And you're going to see brief gasps of breath with the US dollar. It is up today, and generally it's been falling over the overall trend. But you can look at any one day or even a week or two and see that, well, okay, the dollar seems to be coming back, and that's going to lower the price of everything bought with US dollars. So gold, for example, is a great example of that. Gold prices might not be going down. Gold is set at the price of gold, and it's in relation to the US dollar. So when the US dollar falls, the price of gold seems to be rising. When the US dollar climbs, the price of gold seems to be falling. So when you look at the action that we saw today, for example, gold prices are down $12 an ounce. The majority of that is based on a temporary strengthening of the US dollar. So anything can happen in the short term, but in the longer term, be right and sit tight. The US dollar is on a long-term trend, and it's closer to the beginning, very much closer to the beginning than where it's going to end up. The US dollar is a dead asset in my mind, and it's just a matter of getting to that point when people are going to realize that. And it'll happen too with a loss of confidence in the dollar among other countries first, but then eventually among individual people, where they're going to understand that the dollar is declining in value. When you go and buy something, then the price is a lot more than it used to be. If we would see inflation kicking in, then you're going to see the results of that. There's also inflation around you, for example, with the stock market or even real estate prices. You're buying a house for $1 million that not too long ago was trading at $500,000. A lot of that increase is not because the area is developed or that there's more people there or it's more in demand. A lot of that is because it's taking a lot more weaker dollars to buy the exact same asset. And you don't ever see that the effects of that on a very short-term basis. What happens is that it'll slowly happen over time, and to the point where you turn around and say, wow, my grandfather did so good on his house, he bought it for 40 grand, he sold it for $1 million. Part of that would be that the area developed, sure, but a lot of that, if you go back to when you bought the house and you transpose what those dollars were worth then to now, it hasn't actually increased that much in value. And I don't make adamant calls that very often, but I am adamant that we are about to enter a recession. And I'm not saying that it's going to begin in April. I'm saying that it's going to continually get closer and closer. It might show up in April, it might show up in May, it might show up in November. I do not know, but it is on the way, and there's no getting around this. There's no way you can turn around and say, okay, well, we changed the financial regulations or we're doing things differently, so now we're going to avoid a recession. This is one of the longest economic expansions in the history of people, human beings. Okay, this is only going to go so far until it doesn't. And the point is, there's ways that you could prepare for it, be aware of it, and then potentially preserve a lot of your wealth and benefit and profit from it rather than being surprised by it, as most people will. Some of the ways is to put your money into the right kinds of assets, or to pay off your debts, or to lower your expenses, or put off expenses, because a recession will make things hard for a lot of industries, and it will just go like dominoes all over the place. So if high-end restaurants all of a sudden are firing employees and going out of business, or Toys R Us, for example, they go bankrupt and they got to get rid of a lot of employees, those employees either find a new job or they don't have income anymore, and so therefore they can't buy things, and that spreads to other businesses, and it just spreads out from the center where the economy enters a recession, things are slowing down, we're growing negatively rather than growing at all. And so it's going to make things a little bit harder, and it'll put pressures on the stock market, and it'll put pressures on people's buying decisions, and the entire thing kind of slows down together. I've shown you the velocity of money graph where no one's spending the money anymore. Even though they quintuple the money supply, there's not more spending happening, and it's sort of like there's more money out there but not being used. That puts us in a very vulnerable situation for inflation. Not just the fact that we're going to have inflation. I would argue that we've already seen a lot of inflation that's not being admitted by the powers that be, so to speak. There's, such as the Federal Reserve. There is a lot of inflation right now in a lot of things, from the stock market to cryptocurrencies to real estate to even prices you are paying at the store. But that last issue is where you're going to really notice it, and we're not seeing it on the retail level yet, where you're going to buy a loaf of bread and it's going to cost you more. There's a little bit, but maybe there's fewer slices of bread in that loaf. Or when you buy a box of cereal and it's only 2/3 full when it used to be completely full, but it's the same price, the same box. That's phantom inflation. That's running rampant right now. Go to the grocery store and buy something. You'll see what I mean. And of course, the petro yuan has been launched and announced that they're making oil transactions and futures for oil in China with using the yuan instead of the US dollar. And that's more significant than you guys can probably even comprehend right now, but it's not going to have an effect right now. That's part of the reason that no one's realizing how big this is, because it's going to be slow moving. It's a glacier. It's a huge block of ice that's melting. But once it melts, you can't unmelt it. You can't adjust the temperature. You're going to be in a situation where a lot of the money that was held in US dollars worldwide is now going to potentially not be as necessary for the countries that hold it. What they do then is they would buy something with those dollars and not replenish them. So basically think of it like they're just slogging off or getting rid of all these US dollars. So what happens to these dollars? Whatever they buy with the US dollars and they don't replenish them, those US dollars go to whoever sold whatever that was purchased. So that could be an American company is bringing all these US dollars back home. And the problem with that is it's setting us up for not only inflation, which is not a huge problem. Inflation's okay. You can manage it. You can survive inflation. The problem, just like what I said with the velocity of money, it's not that it declines, it's the speed of the decline. The problem with inflation is if it goes suddenly and strongly and almost out of the blue. And this is what we're being set up for by the way things are being set up with the petro yuan now, and also with a lot of the other aspects of the economy, the ridiculous money printing, which I mentioned is not printing, but the money creation. You've got a lot more dollars, and the more dollars you have, the less each one is worth. Each dollar should be considered like a share of a stock. If a company has 100 stocks out there, each stock is representative of about 1/100th of that company. Same thing with dollars. If there's $5 trillion out there and then it becomes 10 trillion, each of those dollars represents half of as much of a fraction of the gross domestic product of the underlying country. So, as I mentioned, I'm not expecting inflation to go rampant next month. I'm saying that it's just going to be a progression. You're going to see a continual lowering of the velocity of money. You're going to see a continually slow increase in inflation, and hopefully it doesn't get to the point where it just snaps and pops higher because you're going to wake up one day and all of a sudden everything costs a lot more. It's not going to be like that. It's going to continually do what it's been doing for a while now, years, where you're slowly getting used to it. It's just like anything. If you do it slowly, you might not even notice it. And this is kind of what the end game for the Federal Reserve is, where they can eliminate the effect of a lot of the trillions of dollars of debt that we have and that we are facing simply by inflating it away. It becomes easier, theoretically, to pay down the debt. If you owe $100 and then all of a sudden the currency devalues or becomes worth less, then it'll be easier to pay back that $100, especially if you have a coin of silver or gold, because it held the value while the dollar declined. The debt stayed the same nominally. The value of the currencies that you have decreased, and the worth of the precious metals you have would have stayed flat. For example, I'm just using gold, silver as an example here, but if you preserve your wealth against the backdrop of a declining dollar, it's good to have some debt because it's going to become easier and easier to pay down that debt. But as you've seen with the meeting between Kim Jong-un and President Xi of China, not just North Korea, because that's the one in the news, that's the one everyone's watching, but a lot of the other nations from even in Europe now, but especially in Asia, are finding themselves under the embrace of the Chinese government. China is taking over not only the South China Sea, they are taking over a lot of the international connections between them and other countries. If you are Pakistan, you're now in bed with China. If you're North Korea, you're now in bed with China. A lot of the African countries are now in bed with China. South America, China is building a lot of the infrastructure. How are they going to pay that back? They're now indebted to China, just as America is. Everyone owes money to China, and they also owe influence to China, and they know that working with China, as opposed to any other country in the world, is best for them. And so that's what they're doing. That's why if you are in Pakistan right now and you're having financial troubles, you're turning to China, but you're also giving away something. You're giving away your loyalties to China. You're going to be working closely and directly with them. And a lot of the countries that do this are actually benefiting a lot because they didn't have great relationships with America. There's things we could have done better that we haven't done better, but this is the way it's going. The entire economy of the world, so to speak, the interactions economy, is now leaning towards Asia. There are all sorts of ramifications with this, but there's also a lot of opportunities, and this is what we work on finding here. So you're going to probably start seeing a little bit more inflation. It's not going to go rampant in April, I don't think. I hope it doesn't, but it'll go rampant one of these days. Not hyperinflation, but it'll go up a lot. And I don't know when it's going to really kick in, but I do know that it is going to just keep going more and more as time progresses, going all the way through April and May, and you're going to see a little bit of inflation each day to the point where you don't even notice it. And that's how they get you. I mean, at the end of the day, you're going to turn around and say, wow, a year ago, this didn't cost anything close to that amount. That's what you're going to be dealing with. We're also going to start seeing probably some municipal bankruptcies, I think, through the second half of the year, but they may start popping up a little bit in April, and if not in April, very soon thereafter. We will be getting into a recession. It won't start in April, I don't think either, but it will probably be within months after that. And when it does show up, it's going to be swifter and more sudden and more unexpected than anybody else is going to tell you. And the move in the US dollar today, the last couple of days, where it's strengthened a bit, that's a head fake. This is just a trend that is bouncing around a little bit on its way down. So I'd say to you guys, don't miss out on these opportunities. We talk about them here all the time, and there's a lot of specific ones that we give you through our website and that kind of stuff, and I don't want to get into all of them right here on a video. It's very difficult with video where a lot of times people are watching a video 2 or 3 weeks after I make it. So I say Bitcoin's going to go down, and people say, you can't say that. Why would you say that? I'm like, it was $20,000. And then it went straight down to 10,000. Right after I made the video, I called it absolutely perfectly. And I'm not saying now that what I said months ago that it was going to go down from $20,000. I'm not saying that it's going to go down now. I said it then.